South Korea's financial regulator is ready to deploy its stabilization fund worth 10 trillion won. OECD forecasts steady global economic growth of 3.2% in 2024. And the UN launches a $47 billion humanitarian appeal to aid 190 million people in 2025. And welcome to the Economic Bulletin, where we present comprehensive coverage and expert insights on the latest economic trends and developments. Welcome back, and we start off with South Korea, where the country's finance ministry said it was ready to deploy unlimited liquidity into financial markets after President Yoon Suk-yeol lifted a martial law declaration which pushed the won to multi-year lows. This follows emergency talks between Finance Minister Choi Sang-mok and Bank of Korea Governor Ri Chang-yong, as well as the central bank's approval of measures to stabilize the local credit market. The government confirmed that all financial markets would operate as usual, with the Bank of Korea initiating special repo operations to support local institutions. Moreover, South Korea's finance minister has reassured the public that the government will take all necessary measures to ensure that economic and business activities are not disrupted by the rising political uncertainties. In a statement following an emergency meeting, the minister said that the government has established a 24-hour task force to monitor financial conditions. He said the country will ensure exports continue without disruption under the circumstances that were prompted by the short-lived martial law declared by the country's leader that led to political turmoil. And on another note, the Bank of Korea revealed that South Korea's official foreign reserves stood at a $415.4 billion at the end of November, reflecting a $300 million decline compared to the previous month. The central bank attributed the decrease to the stronger U.S. dollar, which reduced the dollar value of assets held in other currencies, despite increased operating income from foreign currency deposits. The reserves are composed of securities valued at $372.4 billion, along with deposits of $19.1 billion, SDRSs of $14.9 billion, gold reserves worth $4.8 billion, and an IMF position of $4.2 billion. South Korea's financial regulator has announced it is ready to deploy 10 trillion won in a stock market stabilization fund anytime. South Korea's foreign exchange authorities are suspected of selling US dollars on the onshore market in efforts to limit declines in the Korean won. South Korea 10-year government bond yields snapped 13 days of declines and were last trading at a 2.720.
South Korea, Asia's fourth largest economy, witnessed a brief political stir as President Yoon Suk-yeol declared martial law for a few hours before reversing the decision under parliamentary pressure. The move comes as the country grapples with economic slowdown and a weakening job market. Economic growth has stagnated, with forecasts suggesting an average growth rate below 2% for the next 5 years, a first in the nation's history. South Korea also faces intensifying competition from China, which now dominates 7 out of 8 key industries, including semiconductors and shipbuilding. Domestically, structural issues like an aging population and over-reliance on exports strain the economic model. The stock market is experiencing one of its worst downturns since 2000, with the Kospi and Kosdaq indices recording significant losses this year. Labor market concerns are also mounting. A report from the Bank of Korea highlighted a rise in economically inactive youth, attributed it to skill mismatches and employer preferences for experienced workers. Inflation, meanwhile, ticked up to 1.5% in November, driven by a weak won and export slowdowns, prompting the central bank to cut interest rates to 3% in a bid to ease economic pressures.
And joining us from Prague is the director of the EU Asian Centre for Strategic Studies, Mr. Mehir Nicholas Ferdsley, to discuss the latest developments on the South Korean economy and the impact of presidential decisions on overall stability. And welcome to Qnews, Mr. Ferdsley, to Economic Bulletin. And let me start off by asking you, what were the main reasons behind the president's decision to declare martial law, do you think, and what led to this reversal of his decision?
Delighted to join you today from Prague. As they used to say during the First Cold War, which pitted Britain against Russia in the 19th century, and there was a rivalry between Moscow and London for the control of Asia, including Korea, and back then commentators and experts called it a tournament of shadows or a rivalry of shadows. And when you have shadows, it means the situation is very murky, very dark. So it's hard to make sense of what happened in Korea in the past 24 hours. So I'll give you my personal opinion. So I think it was a desperate attempt by the president to turn the tables, which failed miserably in just half a day. And I think the two reasons were the following. The first one is the opposition, which is a center-left, moderate opposition. So we should keep that in mind for the financial impact of a possible destitution or impeachment of the president. The opposition in South Korea is not radical or extremist. They're moderate, center-left. So they were trying in the past few months to put pressure on him. And even inside his own party, so his own party would be center-right conservative, there were many MPs not happy about his policies, so he was a little bit desperate from a domestic policy standpoint. I think it's not enough to justify a brutal military coup. So in my personal opinion, there was something else, and it's just my personal opinion. I think there are some radical elements inside the Biden White House, which are the Democrat equivalent of George W. Bush's neoconservatives. So they are called liberal hawks. So people like Tony Blinken, right, who's quite famous or infamous, shall I say, in the Middle East. So Tony Blinken, Jake Sullivan, are really, in control of the foreign policy, national security apparatus inside the Biden White House, and they only have 6-7 weeks left in power before Trump moves in. And I think they are bitter, Jake Sullivan, Tony Blinken, and what you could call the deep state. They're very bitter and anxious about the Trump presidency, and they're willing to do anything to torpedo Trump before he moves into the White House on the 20th of January. So I suspect these guys, some elements within the Biden White House, they may have put pressure on the South Korean president, and they may have, encouraged him to do that totally foolish
Mr. Ferdsley, let me just also ask you a next question, which is how do these political disruptions, do you think, affect the investor confidence in South Korea's economy?
What's good, and it's really a miracle, not much. So if you look at the main, variables, the currency, the won, the yield on the 10-year government bond, which today uh, it was as at 2.72%. If you look at all the Kospi, the main blue chip equity index today only lost 1.3, 1.4%, considering the fact that we had a full-fledged right-wing military coup 24 hours ago. The short answer to your question is not much. So the Korean economy was able to bite the bullet, and so far, in spite of that huge political instability, etc., the economic situation in South Korea is quite good. Why? Because it's a very rich country with low debt, very low debt, and huge reserves. Okay. So when a country is rich, has a lot of dollars and euros and gold, and when the debt to GDP ratio is low, which is the case for South Korea, when a big crisis happens, what's beautiful is the country is strong enough to absorb the shock. And we are witnessing that in real time for South Korea. Even though the shock was huge, financially, economically, so far, they were able to bite the bullet.
But then what do you think the impact would be of this decision expected to have on the financial markets or foreign investment levels in the country?
Not much, because I think people understand that because he failed miserably yesterday, the president is a spent force. And they know that the army doesn't support him, parliament. So it's not like he has a big power. He's still the president for a few weeks, but in essence, they clipped his wings. And so now the country is in autopilot. The risk of another coup is close to zero. And so the country is in autopilot. And when you have lots of cash reserves, it doesn't matter. I think more broadly, what's distressing for foreign investors is to see that a solid country, a civilized, democratic, liberal country like South Korea, yesterday came close to becoming a military dictatorship. And so it's sending signals to investors that emerging markets, even the rich one, even the developed ones, may be less stable than they seem. So I think, ironically, it may impact not South Korea itself. It may impact other Asian, Latin American, African economies. And the perception of risk, Western investors may have now a perception of emerging market risk, which is higher than it was 24 hours ago, sadly.
But then how do you think the government can restore economic stability amid these political fluctuations?
Well, this is the thing. There isn't a big effort to make because, soon the president will leave. That's a certainty. And whoever rules, be it the center-right party, which is in government today, or the moderate, centrist, center-left opposition, to make a long story short, nothing much would change. So Korea is a fairly stable country, fairly rich. It has a lot of positive things going for it. So I think the long-term perception of Korea is quite positive. To be honest, this whole thing started, it was kind of a fit of madness by the president, but it's very limited. And I will argue, once again, my personal opinion, the White House put pressure on him. And because North Korea now is involved in the Russia-Ukrainian war, which is sad, but it's a fact. Some people in Washington said, because North Korea is involved in the Russian-Ukrainian war, let's now involve South Korea, which is very silly. And I think because of that silly pressure, we had what we saw yesterday. But once again, it's a limited storm. It's a storm in a teacup.
How would you think the government can alleviate the domestic and international concerns about the future of the economic growth after these events?
Once again, in my opinion, the risk is limited, the anxiety is limited. If the president is smart, he should resign literally in the next 2-3 days. If he doesn't resign, if he clings to power, he will be impeached and he will be kicked out in 5 or 6 weeks. So the question is, will he resign in 2 days? Will he be kicked out by force in 5 weeks? Honestly, the difference between the two will not make a big difference. And we see it in the financial markets today. Most financial, investors, they did not short, in these circumstances. If the crisis was real, they would have shorted massively the government bonds and the won and the Kospi index. And like I said, all these financial variables are fairly stable. So I think, to make a long story short, there's nothing much to worry. It would be better if the president resigned, but worst case scenario, he would be out in 5 weeks anyway.
Okay. Well, that was Mr. Meher Nicholas Ferdsley. Thank you so much for joining us, Mr. Ferdsley. And now we move on to the latest developments around the world. And in its latest economic outlook, the Organization for Economic Cooperation and Development forecasts global economic growth at 3.2% in 2024, with a steady 3.3% growth projected for 2025-2026. This growth will be supported by lower inflation, job growth, and interest rate cuts, despite fiscal tightening in some nations. Global trade is expected to grow by 3.6% in 2025, rebounding from last year's slowdown. However, rising protectionism and trade tensions, particularly from the US, may disrupt supply chains, raise prices, and hinder growth. The US is expected to see a decline in growth from 2.8% in 2024 to a 2.1% by 2026. The United Nations has launched a $47 billion humanitarian appeal for 2025 to aid 190 million people affected by conflict and hunger in 32 countries, including Sudan, Syria, Gaza, and Ukraine. However, the current year's appeal remains only 43% funded, raising concerns about potential cuts for major donors, including the United States. The appeal is fourth just in UN history, but UN aid chief Tom Fletcher said it excludes 115 million people whose needs cannot be realistically met. Aid efforts have already faced severe setbacks, with food assistance slashed by 80% in Syria and water services cut in Yemen. During his first and only visit to sub-Saharan Africa as U.S. President, Joe Biden met with the Angolan President Lorenzo in Luanda, where he pledged long-term U.S. engagement with Africa. Biden committed over $1 billion in new humanitarian aid to support Africans displaced by droughts and food insecurity. He also highlighted the Lobito Corridor project, a U.S.-funded railway aimed at facilitating mineral exports from the Democratic Republic of Congo. The Bank of England Governor Andrew Bailey has stated that gradual interest rate cuts are likely over the next year, as the process of falling inflation is well embedded. He noted that while inflation may rise slightly above the target in the future, financial markets expect 4 rate cuts next year, as shown in the bank's latest economic forecasts. Regarding potential trade impacts under a possible return of Donald Trump, Bailey said the effects on inflation are complex and unpredictable, depending on trade prices, reactions from other countries, and exchange rates. Russia's finance ministry has announced plans to increase deferred foreign currency and gold purchases over the next 6 weeks. The central bank halted foreign currency purchases last week to stabilize the ruble, which had dropped to multi-month lows. The deferred purchases totaling 114.4 billion rubles from December 6th to January the 14th will be carried out next year, with the central bank deciding the timing and method of resumption. Russian President Vladimir Putin has called for the government and central bank to coordinate their efforts to curb high inflation. Putin, addressing the annual Russia Calling Forum, stressed that boosting the supply of goods and services to match demand is key to controlling inflation. Highlighting the need to tackle the current inflation rate, he called for coordinated action between the government and the Bank of Russia, describing this as a direct mandate rather than a mere recommendation. And data from the Australian Bureau of Statistics showed that Australia's economy grew by 0.3% in the third quarter. Australia's gross domestic product grew 0.8% year on year. This marked the slowest annual growth since late 2020. Government spending contributed 0.6% to growth, while household spending remained flat despite rising incomes. The Reserve Bank of Australia had anticipated a 1.5% growth by year-end, expecting tax cuts and stable interest rates to boost consumer confidence. And in the MENA region, Prime Minister Mustafa Madbouli has witnessed the signing of a significant investment agreement by Nissan Egypt to manufacture a third vehicle model locally at its plant. Nissan Egypt has allocated $40 million to the project, with an additional $2 million investment to increase the production capacity of its three models to exceed 30,000 cars annually by 2025. The new model will be manufactured with a local component ratio exceeding 54%, aligning with efforts to boost domestic production in Egypt. Abu Dhabi, aiming to diversify its economy beyond oil, has introduced the Abu Dhabi Registration Authority to streamline business registration. This new centralized authority, part of the Department of Economic Development, will simplify processes for businesses and ensure compliance with UAE and international regulations. Abu Dhabi, which holds over 90% of the UAE's oil reserves, is focusing on expanding sectors like tourism, logistics, and manufacturing to secure future economic growth amid global efforts to reduce reliance on fossil fuels. Norway's sovereign wealth fund, the world's largest, has divested its entire stake in Bezeq, Israel's largest telecoms provider, due to the company's role in providing telecom services to Israeli settlements in the occupied West Bank. The decision follows a new, stricter interpretation of ethics standards by the fund's ethics watchdog, the Council on Ethics. Bezeq's involvement in the expansion of Israeli settlements, which are deemed illegal under international law, led to the recommendation for divestment, and the Council on Ethics stated that Bezeq's services to settlements contribute to violations of international law. British Prime Minister Keir Starmer has announced a $1.3 billion green energy investment from Qatar during a session in Parliament. The funds will be directed towards climate technology in the UK, with engineering giant Rolls-Royce set to receive some of the investment to support its energy transition efforts. The UK is keen to strengthen its relationship with the affluent Gulf nation, with Starmer aiming to secure tangible benefits in areas such as security and economy. And that's all for now, and here's a roundup of today's key headlines. South Korea's financial regulator is ready to deploy its stabilization fund worth 10 trillion won. OECD forecasts steady global economic growth of 3.2% in 2024. And the UN launches a $47 billion humanitarian appeal to aid 190 million people in 2025. And that's all for today's economic bulletin on Qnews. Do stay connected for more news and updates.